This is Channels Television and you're watching Capital Markets. Now let's begin the segments with the equities market review. The BS dominated the local bourse this week with the benchmark index closing 3.98% lower at 27,659.44. The market capitalization also declined to 9.5 trillion naira, and total volume of shares traded dropped to 1.35 billion, with a value of 9.28 billion naira exchanged in 18,679 deals. Market breadth was negative, with only 15 gainers against 44 losers. Skybank was the top gainer with 41.67%, while Owando led the laggards table with 25.58%. Again, Skybank, UBA, and FBN Holdings collectively accounted for 42.51% of total volume traded during the week. On the equities market, like we said earlier, was set in motion this week by the earnings season as stock prices either appreciated on satisfying earnings or depreciated as a result of the state of the economic recession. Now, some of the earnings that created new entry to pave the way for investors' exit are Flour Mills, Unilever, Lafarge, and of course Wema Bank. And joining me now to review these results is Tunde Oyekunle, a stockbroker and analyst at Finawell Capital. Thank you so very much for coming through, sir.
Thank you, it's a pleasure.
Let's begin with generally, first of all, what are your thoughts on these results that have trickled into the markets this week so far?
It is expected that the season, any season, will dictate the market and the investor sentiment, and at the same time boost the performance of the market. But with the result we've seen so far, it has not been all true encouraging. Apart from Flour Mills, United Capital, that posted increment in their PAT, majors like Nigerian Breweries and Lafarge didn't do very well. So we are just hoping that the macroeconomic indices will be better and for the company to perform better way forward.
Now, we know that each of the performances of this company is driven by one peculiar reason or the other. Let's kick off with Unilever. Unilever's second quarter earning actually came in this week, and if we can see what should be appearing on screen shortly to be the earnings of Unilever Nigeria PLC, which had a 12.2% increase in revenue that period, although we know that this wasn't a very good performance when you compare to the Q1. What do you think are the key reasons why we have profits after tax of 52.19 million and the profit before tax of 67.91 million? That is decline actually.
Yep. For Unilever, as you've said, they're able to increase their turnover with about 12%. With the tough economic environment, I think is a very good, it's commendable for them to be able to increase that. But the reason is not far-fetched. They're able to increase their distribution and production to both local regions and other West African countries. They were able to also manage their finance costs very well. They were able to cut down finance costs with about 56%, and at the same time increase their finance income with over 100%. So that accounted for the 50 million profit, H2 profit they were able to make, compared to about 504 million loss they made last year, H1.
You know, a lot of companies also complain that FX shortage has actually impacted
Absolutely,
the operation. How do you think that has changed the direction for them this time?
For most of them, if you look at their bottom line, the loss from foreign exchange contributed negatively to their bottom line. An example is, we've not got into his Flour Mills. Flour Mills was able to, their profit was negatively offset by foreign exchange loss, and Lafarge is a major company to consider in that regard.
Do you think the current situation we found ourselves now will begin to gear up these companies and the management to start looking inwards and then channeling their products to the sub-Saharan African region? Because it looks like over time, concentration of all of these product sales has been on the domestic markets.
The management, they are doing a lot. They are doing a lot to at least get through this challenging time. As gotten from the report of Flour Mills was able to focus on its core production and to also strengthen their competitive advantage in the market. They were able to reduce their cost, and at the same time they were able to restructure their operation as well as trying to diversify their distribution of their product, and this actually paid off for them, because for Flour Mills have a recording about 4.4 billion PAT coming from 8.4 billion. It was highly commendable and far above market expectation. So the management has been able to strategize out it, despite the fact that they had a lot of loss from foreign exchange transactions.
And they were also able to declare 1 naira.
Yeah, 1 naira.
Propose a dividend of 1 naira. What does this tell investors about their performance?
Our shareholders are already smiling with that. So for investors and the fact that they are able to really project to strengthen that result, I think investors are really looking at it from that sector.
Now we have an EPS of 95, 550. That's 5 naira 57 or thereabout, 557 compared to last year when we had 345, and that's a 61.45% increase. What are your thoughts on this? Do you think they've done much? Do you think they've done well, or they are performing below expectations?
For Flour Mills, we're talking about the group, because the group was able to have about 11% increase in revenue. In their audited result, and just as I've said, considering the tough business environment that we have here and strong economic headwinds, I think they've done very well. And with an EPS of 5.7, I'm paying 1 naira. I'm very sure the shareholders will give them kudos.
So it's a pass mark. Let's quickly shift to Lafarge, because we're running out of time. Lafarge also came in. Of course, they gave a warning before they issued this result. So give me your thoughts on that.
Lafarge gave a warning, and we are not surprised at the result we've seen, with a pre-tax loss of about 28 billion is actually alarming, and this loss is driven by unrealized foreign exchange loss from their foreign denominated loans. So it's expected, and currently they're able to generate about 5.1 billion in other comprehensive income to partly offset that, but the debt to equity ratio of 1.6 is not good enough.
Okay, in one sentence, talk to us about Wema Bank. It actually came in very, very satisfactory, very impressive. What do you think?
Wema Bank is impressive with 1.1 billion PAT, which is an increment of about 10.6%. I think it's a very good one, and EPS of 6 kobo is a good thing for investors to look into.
All right, thank you so very much. We will quickly give our attention to the African indices. Most indices in the African markets declined this week, except the Ghanaian Composite Index, which improved 0.1% week on week. The worst performing index was Nigeria, which comes ahead of Nairobi, declining 2.3%. We see Johannesburg Stock Exchange also in the negative territory. Yesterday ended 0.1%, while week to date is 0.3%. Morocco is 0.1% in week to date, and of course the BRVN 0.6%. Stay with us on Channels Television. We have much more for you on the show. We'll be back after this break.